2,800 crore rupee IPO of the chemicals and oil storage and logistics solutions provider Aegis Vopak opens for bidding today. We have Mr. Murad Moledina, non-executive director at Aegis Vopak Terminals, joining us here in our studios. Sir, good morning. Great to have you with us here.
Yeah, hi. Good morning.
Thank you very much. Strong demand as far as the anchor book is concerned. So
yes.
Congratulations. And I think we'll see what the retail demand is like.
Let's watch.
But it's a specialized business, and we'll get to financials, etc. But for our viewers, if you can just start by, you operate terminals for liquid storage, which is, chemicals, etc., but also LNG, right? Just describe the business for us at a very basic level.
Let me explain in very simple terms what is the business. So business is setting up storage tank terminals at ports to receive, store and deliver liquid cargo as well as LPG, not LNG. And in liquid cargo, we can store various kinds. We can store petroleum, petrochemicals, chemicals, veg oil, and there is a lot of flexibility. This is a very niche business, like you said. It requires special skill set. It's not a plug-and-play business. So you set up at a port. These cargo come in bulk. So it's 5,000 KL. 5,000 KL means 50 lakh liters or 10,000 or 45,000 also, which is 450 lakh tons. And you have to unload it within 48 hours, store it, and then deliver as advised by the customers, whether by road, filling up road tankers, or rail, filling up rail wagons, or even delivering via pipelines, as the customer would want.
The liquid part is mostly hazardous stuff, or is it?
It's all kinds. Like I said, even veg oil. I mean, these liquids could be of a temperature as high as 300 degrees centigrade. Now, 100 degrees water boils. Or it could be the other way around, LPG, minus 40 degree centigrade, like more than an ice cream. So various temperatures.
So these usually come in these ISO tanks, right?
No, they come in bulk. So the whole ship is filled with those liquids. We have a marine loading arm like a crane, hooks into the ship, sucks the product, jetty pipeline brings it to the middle, which we call stomach part, where tanks are there. And then you deliver.
So I just wanted to understand the competition as well, because, there are a lot of port operators with storage facilities. I'm guessing Adani's as well to an extent, they're in the same line of business. How unique, basically how strong is the moat? And the customers, wouldn't they have other options? What about the, the competitive intensity?
Let me just start with the customers. If you look at my DRHP, 93% plus are repetitive customers. We are pioneers. 1978, we started this business. And there is a huge customer relationship. My partner, Vopak, has been doing this business last 400 years. 23 countries, very deep-rooted customer relationship. Here, my name, Aegis, is a Greek word which means to protect. So this business is not about competition. This business is how do you build the efficiencies. So we have an in-house infrastructure construction ability to construct the infrastructure quickly and cheaply.
But JSW and Adani, they're big groups.
So
they do count as your peers and competitors, right?
Yes. So they are a little bit different because they are port. So they will build the infrastructure where they are having their port. I go and put up terminals at various ports. That is the difference which makes us a little different. And also the care. This is not a plug-and-play business. And I would crudely say this is not a business of deep pockets, because you need to be doing this all the time. It's not like a sidekick business. You have multiple business and one of the businesses terminal. So we are not doing anything else. No road, no Swiggy, no Zomato, no EV.
Okay, all right.
Focus.
Full attention.
All right. Good to have you, sir, in the studio. We here at CNBC-TV18 request you to come more often. I think you require an IPO to get the management of Aegis Logistics to the studio. That aside, let's focus on this issue. It's not very, very cheap. I know that the anchor book is strong. But if I do a valuation parameter, not very, very cheap. So we'll have to see, the returns that investors get. But otherwise, the listed stock Aegis Logistics has given very, very good returns over the years. Few basic points now. You're raising some money by the fresh issue. The debt number is going to come down, right? What is the rough interest savings that you will be getting?
Correct. So let me just give you 4 important points of this public issue. One is that bank borrowings are going to become zero. So 2016 crore are going to be repaid.
Okay.
You take an average 8% interest rate, 160 crores.
100.
9 months number are 85 crore PAT. So you look at the borrowing reduction that is going to happen and how much that is going to change my PAT.
Okay.
Number 2 is that my 2 liquid terminals have just become operational in March, which is a JNP in Newport, as well as Mangalore expansion. And then 2 cryogenic terminals at Mangalore and Pipavav are getting commissioned in H1 of the current year.
Yes.
So they are like factories. I have 22 working sites. I have developed 225 acres of port land in 6 ports. And these are going to triple my LPG capacity, the 2 cryogenic which is going to come. Plus the fact you just have to understand that these terminals work on turnarounds.
Right.
So if I have multimodal evacuation started, my utilization would step up.
Right.
So we are just getting hooked into Jamnagar-Loni pipeline, Kandla-Gorakhpur pipeline with our existing terminals also. So all of this is happening in the current FY26 and you will see a marked...
So very, very basic question. Gas terminal and liquid terminals. Which fetches you better margins, better ROCE? Just bare basic, brass tacks question.
Let me give you a very easy example for that. Both are crazy. And I'll give you LPG first. LPG, my capex cost under DRHP, CRISIL, independent agency, has reported is one of the lowest, 1/3 than the peers. And it is around 1,200 rupees per metric ton of my capacity. My revenue yield also in DRHP is 1,250 rupees. Okay, 88% is the EBITDA. So I can go up to 80% of my capex cost as EBITDA. So even if I start with a low utilization, it's big EBITDA. And then you grow as the volume grows. In liquid, it's all about change of product mix. It is like this. If you go, and I'll just take a second. If you go and check into a hotel, your checkout time is 12 noon, but your flight is 6 a.m. Will you wait till 12 noon? No. Same here, the product. The rates are monthly. If I find products which evacuate faster, I can get another set of products. Another example, in the same hotel, Virat Kohli checks in, I check in. The rates are different because he needs a little more attention. Similarly, in my terminal, if an acid comes and a petrol comes, different attention, different price.
You're explaining it very well to potential shareholders, I must say.
So you get huge product mix potential.
Right. Mr. Moledina, what are the variables which affect your business? I mean, is it just demand? Is it... And all of this stuff which is coming in, it is for use here within the country, or this is transshipment? I mean, it's going ahead.
So we are, I always tell people, and I say it very crudely, the most fatu person on ground is Aegis, because we are very conservative and risk averse, right? So how we make our infrastructure makes us different. So I said we construct our infrastructure quickly. I take 12 months for liquid, 18 to 24 months for gas. Look at anyone else, they will take far longer. Second, I construct it cheaper than others. So I get back my money faster. Life of the asset is 40 years. Third, what I do is I make it flexible. So I can change product. Fifth, I make this terminal trade neutral also. So I can handle import, export as well as coastal movement. So let's say tomorrow government of India says no more imports. Then what happens to my infrastructure? I can do exports, I can do coastal movement also. Jamnagar refineries will cart their petroleum products all the way to Kochi to distribute. They will not fill up 20-tonner trucks, so many of them, and then it takes so long to... With GST creating a common marketplace, it's been a blessing. So this business is, you have to make it very flexible. You have to ensure that sustainable growth is there for the 40-year life that your asset has. Okay. And that is, just lastly I should put in, is that we do not rush into a port. There are 219 ports in India, 19 major, 200 minor. I'm only in 6. I go after demand. When there is a sustainable long-term demand, do I go and put up my infrastructure.
Let's focus then back on numbers. You told us about the debt repayment, the Mangalore cryogenic terminal. 670 crores will be going towards that. So what are the matrices you're working with out there? Volumes, EBITDA contribution, what could that be?
Those are a little bit forward statement, but I can give you this way. That the terminal is capable to do 6 million tons of throughput.
Okay.
My rate of revenue is 1,250 rupees. I have spent only 900 odd crores for that terminal.
Okay.
Now, as the utilization will ramp up in 5-7 years, I would be reaching that peak.
Okay.
So you take your take that what a potential that terminal has, because I will not be able to step into that forward.
All right. So when you list, then we'll push you more for those numbers. But final question, you have said Vopak quite a few times, and that's a big name globally.
Yep.
This is a fresh issue. But at some point of time, Vopak may want to take some money off the table, or will they be locked in for a few years?
Superb. So we have done a 3 years lock-in sort of inter-se agreement, part of DRHP. So we have taken into account everything.
So Aegis as well as Vopak, both will not sell?
Yes, both.
Both will not sell for 3 years. They're locked in for 3 years.
It's a joint venture.
So then you'll have to find a way you'll have to do another fresh issue to bring down the shareholding from...
Primary. What it does is primary issue resets your debt to zero and makes your eligibility more because equity is pumped in.
Okay.
So it's a double whammy in the sense that you get more eligibility so you can do more capex and then you have again made it.
All right. We have got all those points on board, sir. The only point I would like to say is that valuation is not very, very cheap, but you seem to be having a good pitch, as you've told us. And in fact, we look forward to chatting up with you on this.
Thank you so much.
Thanks a lot for coming down.